The market is up. The market is up. Uh, this TerrenceRe with a market update. Right now, we got the S&P futures up 35 handles. The Nasdaq is up 97 handles. The Dow is up 252 handles, and the Russell is up 17 handles. So basically, this video I wanted to talk about the about Tesla. Obviously, Tesla is having a good day. It's up almost 5% on the day, and tech really in general is up. So one of the things, so basically, what we have for the most part is the market is being held up by, I would say, an approximate right around 6 to 7 stocks is holding the whole stock market up. Basically, all your high tech stocks. Nvidia is at all-time highs today, right? And it's continuing to go up. So you got Nvidia is up, all-time highs. Microsoft is up, all-time highs. Apple is up, all-time highs. Let's look at Tesla is not at all-time highs, but it's back up to almost within, it's right within reach, right? So I think that when you have a market like we have now, if we were to go down and look at other stocks, let's go to, what I'm gonna do is pull up the Dow, right? Let's pull up the Dow, and then let's look at stocks in the Dow. So we got the 30 stocks that make up the Dow Jones Industrial Average. Um, and for the most part, it's a green day on most of those stocks today. But if you look at them overall, let's look at, let's look at CRM. CRM is actually, now I did not plan to click on this, but you can see it's at a fib level that I must have drew this. I'm gonna go out 3 years. I put this on back at the Corona pandemic. And I promise you, I did not plan to pull this stock up. And you see it's right at this level, right? So for me, just looking at that is a bearish sign for me. But I also want to. You're probably looking at this chart, and I don't use these indicators that often. This is for more like when I'm looking at momentum, right? What you're looking at is, if you look at these lines up here, this is called your alligator indicator. And so basically, when you see these lines, when you see the green and the red line and the blue lines intertwine or like collapse, it's a saying that the alligator's mouth is closed. And then when you see it open up and you see them spread, that means you want to buy in the direction that they're opening up. And this is the awesome oscillator, which measures momentum. That acceleration, deceleration down here at the bottom is like your acceleration. So basically how it goes is, like, just think of it like this. Think of it like a car. You're gonna decelerate before the car turns around. You just don't take the car and just whip it around. So you'll see down here, you'll see the market decelerate, and then you'll see the momentum change. And so like you're looking up here, you can see when it came up here and reached this fib level, and you can see down here at the bottom that it began to go red, and then you can see the momentum slowly changing on this particular stock. This is Salesforce, right? And this is in the Dow. Now let's look at AXP, American Express. You see it's turning. It began to turn as well. And you even see, like, you can see that awesome oscillator getting ready to cross over the zero line. But Microsoft, one of those stocks, one of the tech stocks that I named, is up, right? So let's look at Boeing. Look at Boeing down, and has been down, going sideways and trading in a pattern, and look at it dropping down. The reason why I wanted to look at Caterpillar, it's nowhere near as highs. You can see it in the range as well. Goldman Sachs. Look at Goldman Sachs. Look at this. You can see it breaking down out of a range. The reason why I wanted to pull up, look at Disney. Disney is down. So I'm showing you JP Morgan. Look at JP Morgan. It has been down the past week or two. I'm showing you different stocks that are trading in a range. Look at Visa. The reason why I'm showing you these stocks, look at Merck. Look at Merck. The reason why I'm showing you these stocks is because, but if you look at the overall market, if you look at the overall S&P, I'm go back to my watch list, you'll see, now look up here at the futures. These four right here, that's the S&P futures, that's the NASDAQ futures, that's the Dow futures, that's the Russell futures. They're all up overall. That's because the large market cap stocks like Apple, even Amazon is down on the day, but look at it. Look at how it's been, like it broke out of this range. Here's the all-time highs right here for Amazon. It was right there on Friday because you have a few stocks. Let's look at Google. Google's up. And if you overall, like you want to measure the NASDAQ, you would come to the triple Qs, which is basically your tech stocks. I'm going to check the, and if you look at the momentum down here, you see how it's green and it's still going up? That's because tech is leading the way in the market. Right now, our tech stocks are NVIDIAs, our AMDs, our Apples, our Microsofts. These stocks are fueling Tesla. So the market is basically being held up by a few stocks. So if you were managing a portfolio, you could just be long these stocks and you'd be doing well. You'd be outperforming the overall market. That's how you would be getting your alpha. So I wanted to do that. I wanted to do this video just to go over that because I noticed that just looking at it. And I also wanted to talk about Tesla. I had some news on Tesla that I really wanted to go over just to make you aware, just so that you, one of the things about my channel I wanted to do is do information that is not readily, because on CNBC, they pretty much just tell, buy everything. And I want to like provide a little commentary to that so that you can understand a little bit about what's going on and not just buy everything. Just, do have a little strategy to your buying or selling. So let's take a look at Tesla. Let's see. Now, there was some insider selling in Tesla. Someone in Tesla, I got the name of the guy. If my my platform will pull it up for me, or do I already have it? All right. So Tesla insiders sold over 1.3 million in company stock. Zachary Kirkhorn, insider at Tesla, made a large insider sale on November 17th, according to a new SEC filing. So a Form 4 filing from the U.S. Securities and Exchange Commission on Wednesday showed that Kirkhorn sold 1,250 shares of Tesla at a price of $1,064. The total transaction amounted to $1,329,388. So when I looked at it, it says following the transaction, Kirkhorn still owns 53,000 shares. So it may be a much ado about nothing. He could have sold this. Maybe he want to buy a yacht. I don't know. He just want to take some profit off the table to go do something with the money, buy a new spot, whatever. But I just thought it was interesting that, that there was some insider trading going on. Now, in legal terms, an insider refers to any shareholder who owns at least 10% of a company. This can include executives in the C-suite and large hedge funds. These insiders are required to let the public know of their transactions via a Form 4 filing, which must be filed within 2 business days of the transaction. So that's the legal term of what an insider trader, what an insider means. A lot of times we'll hear insider on TV, and when you hear that term, it sometimes it has like negative connotation. You know, you hear the word and you're like, oh man, this somebody who on the inside. Maybe he knows something we don't know. And this could just, and I just, gave you the definition of what it means legally. So this could just be some, he owns 10% of the company, and maybe he just want to take some profit off the table. I'll probably, be honest with you, if I own that much of it, I'd be taking profit off the table too. I probably wouldn't even own as much as he does. Just, you can see the levels that I have marked on here. I didn't get it. It didn't come down to my second level, but you can see my first level came down in here, and you got a little, what I would call, I'm gonna take this off, looking like some form of a pattern, almost like a W of some sort, right? Which could be a reversal pattern. Well, I want to see how this day ends. If it's going to end below this 78.6 Fibonacci retracement level, or is it going to go up and break this high? If it breaks this all-time high, it could be off to the races again. So, the same thing. Look in the video. These stocks, man, these are the stocks that's holding it up, holding the market up. Now, if we go to, I'm gonna show it to you. I'm gonna pull up the S&P 500, and I want you guys to be able to see what I mean. I'm gonna pull up the S&P 100, the top 100 in S&P. We're gonna go to, I'm gonna go over here and look at the quotes. Now, this is one of the things that I say why I like Thinkorswim so much. You can do a lot of different things. I'm gonna come over here to market cap, and now I have this market cap weighted. So you see all the top stocks in the S&P 100 or the S&P 500, same thing. Weighted by market cap. So Apple is the largest, all-time highs. Microsoft up near all-time highs. Google all-time highs, up near all-time highs. Amazon right there at it. Tesla, Facebook, Nvidia. These are the stocks. Now, once you start getting down into JP Morgan, or this is Berkshire Hathaway, I haven't even pulled up the chart. Once you get down to JP Morgan and Home Depot and Visa and Johnson, and you start looking at these other stocks, you start seeing a different pattern to the market. And so that's why I wanted to let you guys understand what's going on. You got these top stocks, and look at the market cap. These are $1 trillion market cap companies. And so when you come down here and look at something, let's come down and let's look at, just to put it in perspective, let's look at Salesforce, right? A market cap under, this is a 294 million, right? So you looking at a company like Tesla, it's 3 times the size of that company, market cap wise. Apple is larger than countries, market cap wise. It's larger than countries. So I say all of that to say this: if something were to happen, and at this point, something to take the market down would have to be some type of black swan event, something like a coronavirus that happened before. It would be something that's not on the radar, because right now, coronavirus is actually priced into the market. It's in the market, and it's being priced in. So it will have to be something that we don't see. So we have bullish news everywhere. It's not like I'm not on here trying to be. I'm just making you aware of certain things on how the market is structured. President Biden plans to renominate Jerome Powell to keep his job. So that is bullish for the market. The only thing that we have to watch play out is the progressives. Like I said, Elizabeth Warren is already on record as saying that she won't vote for him. So, but they're saying that the Republicans, that the consensus is that maybe the Republicans will back that play, but progressives are gonna try to fight it. But progressives hadn't been they haven't been good at winning. They raise a lot of noise, but they haven't been willing to go all the way to get what they want. So, excuse me, it may be a much ado about nothing, but I will pay attention to that. But that is bullish for the market. So we got a lot of bullish indicators and signs for the market. But I just wanted to make you aware that it's basically 5 or 6 stocks that's carrying the market, and that is what it is. So most portfolios, I would aim them around those 5 or 6 companies until, and I actually do expect for Facebook to make a move. If you're looking at Facebook right now, you got a sort of a head and shoulders pattern. You got a shoulder here, and I didn't even plan to. I'm gonna wrap this video up. I didn't want to make it this long, but that ain't what I want to do. I see something, so I'm gonna go ahead and put it on here. So you got something like a one shoulder, head, and you got another shoulder about right here, right? That's a reverse head and shoulders right here, which could take the market higher. You would take your I would do a fib extension here. Now, I'm not telling anybody to take a trade here. You risk this, your money, risk at your own. I'm just showing you how I looked at that, and if you targeting it off of this, I mean, it could take you all the way up to there. So this market, like I said, once again, I don't want to sound redundant. Is being carried by tech. Tech is carrying the market, and then that's that. I will come back maybe later on and talk about some other things I don't that I have on the docket. So if you like this video, hit the like button, hit the subscribe button, share the video, and then that way you'll get all the little updates that I come through with. And a lot of times when I get updates, you can, these are tradable. If you're saying, well, how could you trade? How could you trade this Facebook right here, Ray, if you wanted to trade it? You could come right in here because you could see that it touched the Wilders right here. It touched the moving average. Let's do something. Let's do this. I'll go ahead and put a trade on. I'm gonna put a trade on right now. I wanted to go. Let's do something. Let's see. Let's go ahead and see what this will look like. I don't want to do it off of that. I'm gonna show you something else. It touched here. I'm gonna draw a fib from here to here. And I'm kind of like I'm just doing this. Let's see. I probably should bring my fractals on. I'm gonna show you how I don't really. All right. I think I put that. That's not what I wanted to do. I don't want that there. What I'm doing is I'm trying to get a target. And that's what I'm doing. I actually don't want this here. Come here. Come here. I want to measure that. So that came down to the 618. Hit here. And then we got, did it break that high? 353.83. So I want to see it break this fractal. And it did break this fractal. So that would be a next take profit level for Facebook. Then that would be a next level take profit for Facebook. So what I'm going to do is I'm going to put on a call spread. Let's go. I don't want to do 25 days. Now it's probably going to be more action. It's going to be more option activity right here. But 60 days is a little bit much for me. I don't really want to go 60 days. Let me see how it prices out. So for a $5 wide spread, but I don't want to be 60 days. I don't want to be that far out because that's going to change the take. If I'm right, I want to get paid quickly. And you could say, well, you could buy a call option. Facebook has the only reason why I wouldn't want to buy a call option in it is because Facebook right now has a high IV rank, and I don't want to pay for you when you buy calls. You're subject to volatility crush, so you can get vol crush, meaning that you could be right directionally, and then the value be sucked out of the options if they take the vol out, and you'll lose money on the call. So probably the best trade if I'm going to sell an option, and if I'm going to sell this 60-day option, would be to come here. Let's see if we collect a third of the width of the strikes. Probably sell like the 34 delta. Let's see. And then buy the 325. That'll collect 172. Is that? And basically, when I sell this put spread, I'm taking a bet that the market is going to continue to go up. I just don't. Only thing is, I don't like the 60-day, and I don't want to do the 25-day. To me, that's a little close. If I come 39 days and do a weekly, the pricing you can see on the bid ask. If you come over here on the bid ask, you can see that these are like 45-cent wide options. So this is where when you're trying to price out a trade and you're trying to make a good trade, because you don't know what the market's going to do. I have no idea what the market's going to do, right? So I don't really. And you can see that I can get filled anywhere between 110 and 152 on this spread. That's a wide spread, and that's because I'm in the weeklies. And I wanted to make a trade. I could just come here 31 days, and if I buy the call spread, right? This is what I do, just going through trying to map out a trade. Like, what would and you could say, I don't like how they're pricing out. And that's one of the things of making a trade, especially when you're trading options. You don't just want to put on a trade and you don't like the price of how it's pricing out. You got to price it out. And I really don't like how it's pricing. And you could just buy shares, but this is a $345 stock. So you buy 100 shares of it, you putting $35,000 on the line. And my next level is right here at 363. And so I do think it could make it up there. So maybe I'll do another video later on today. I'll continue to mess around with it and see if I can find something else. I am still in the, if you check out the video I did on Friday, you'll see I put on a short call spread in the diamonds. It's down a little bit, but it's right here at a level. You got a low, a high, a lower low, and right here on the pullback. This is actually the perfect level to get short the diamonds, right? Just based on the chart setup alone. So already I ran over my time. Hit the like button, hit the subscribe button, and you'll get all my little market updates. And I hope you enjoyed the video. And with that, I'm out. Peace.